Hi, this is Zak Mir, editor of Spreadbet magazine, with a look at some fresh bulletin board heroes stocks for June the 5th. And I'm starting off with Berkeley Mineral Resources, and I think a sense of relief is the key here in terms of the latest vertical push by the shares through the 50-day moving average at 1.36 pence. The move was flagged by bullish divergence in the RSI window, quite a sharp line there up to the upside, and of course the extended base off the floor of a falling February price channel from the beginning of last year. The situation now is that normally you would expect a failure towards 2 pence or 2.1 pence at the top of the channel, but my suggestion here is that the U-shaped reversal here, the very sharp reversal that we've seen, could mean that if we get a weekly close above 2 pence over the next week or two, let's say, there could be a new leg to the upside, and the favoured destination then would be the February resistance line, the red line there, to 3.5 pence. But of course, you've got to wait for the buy trigger or the continuation trigger of a 2 pence plus level before assuming that there would be any further upside there. Next up is a stock where there's been also been another long wait for recovery. Arguably, actually, the buy signal, from my point of view, came in December with a break up through the 20-day moving average, and also positive divergence in the RSI window here, a double-tested bounce off an RSI line, which really suggested an entry point around 0.26 pence at the start of the year. Unfortunately, if you'd gone long then, you'd be waiting 6 months and sort of undergoing various agonies until the big break came now. But there was an early bird signal there. That was backed by another bounce off the RSI line and another one ahead of the move at the end of last month. Situation now really is that we'll be looking for further gains towards the top of this December price channel at 0.5 pence and the main 2013 resistance as well. The stop loss on the buy argument probably best either as an end of day close back below 0.31 pence, which was the brief peak in April, or perhaps towards the price channel floor at 0.28 pence if you feel like risking a bit more. But probably 0.31 pence, the right level, especially as that ties in with the 200-day moving average and the key break of that feature this week. Finally, to finish off here, we've got Solo Oil, another situation where bulls have been kept waiting for an extended period. Here we've got a broadening triangle, similar break of the 200-day moving average to Nostra Terra, and we're still following through on that momentum backed by an RSI uptrend line running through 60 at the moment. The shares are quite overbought. There may be a pullback towards the 0.27 peak of December, but at least while we're above that, then one would be looking for further gains towards the top of the triangle formation at 0.4 pence. But I think the message here really is we're happy that we've broken the 200-day moving average. That could start off a new bull run, and an initial point for pence target is okay even from present levels. That's it from me. More updates at spreadbetmagazine.com during the week.